What's up guys, Justin here. In this video today, I'm gonna be breaking down how I made over 1,600 bucks in just a couple hours of day trading. Now I don't care who you are or what you're doing, but if you can make 1,600 bucks in just a couple hours, that is not a bad day. So I'm gonna break down how I did this. Just so you know, I didn't use a lot of capital in this. So if you don't have a big account, you can replicate this process, and hopefully after watching this video, it'll give you some insight on how you can do this in your own trading. So the way I did this was on a stock called NVDA, and I did it playing the put options. So let's dive into the computer and let me show you exactly how I did this. All right guys, so checking out the charts here, what you're looking at first are my executions. So what you'll notice here is that it was a swing trade. Now, I normally don't swing trade that often, but when the opportunities do present themselves, I definitely add some size, and I will definitely swing things over the weekend. It is really important to note though that if you are going to be swinging options, it's pretty risky. Because let's say the plan doesn't work in my favor, and let's say the stock doesn't even move at all. Let's say it stays exactly where it is the day that I swung it. Depending on how many days you're swinging the option, let's say for example over a weekend, which this one was, that stock will lose value because of theta burn, which all that means is option contracts lose value over time. So that's why you really need to try to make sure you're picking plays where you expect high volatility either the next day, the next week, or so on and so forth. So as you can see here, what I ended up doing here, ignore this sell. This was from a different trade I was taking earlier. But what you'll notice here is as the stock began ramping up towards the end of the day, I started buying puts, okay? Now, you might be wondering why I did that, and let's break down on why I decided this would be a good idea and why I thought this gap down the next day was going to happen. Because that was the whole thesis, was I was buying into this ramp up, trying to get a great average, and then it gapped down the next day, and I was able to make a big profit there. So the key here, guys, is whenever I make any trade is I always start with the daily chart, okay? The daily chart or the bigger time frames that you look at will always show where the biggest trends are. So if you see something downtrending on a bigger time frame, then that means that that is more likely to keep occurring. Now, if you see a reversal on a bigger time frame, that means the reversal is more likely to be occurring and has a higher profitability of bouncing or doing whatever the reversal is. That's why whenever I'm looking at a trade thesis, I always start at the biggest time frame possible. And for me personally, I like to go with the 1 year, 1 day chart. So this trade occurred between December 3rd and December 6th. So let's zoom in on that real quick. Let's ignore all this and let's go to December 3rd and 6th. Before I actually took the trade, this is what the stock looked like. As you can see here, there was a lot of consolidation happening near its highs, which all that means is it wasn't breaking out, it wasn't breaking down, it was just kind of staying sideways. So what this meant to me was I was looking for a direction for this stock to go. So what I noticed here is that it was beginning to break this monthly support. So if you look back in November, and it really didn't break past down this 306 level, but on this day, it did start pushing down there. You'll see it actually went down to about 301 at its lowest. So what that showed me is that there was a lot of weakness happening here. Now, not only was there weakness happening and a major support level being broken, but if you zoom out here, you'll notice that at the beginning of the year, this stock was trading at about $100. And for the most part, it didn't really go much higher. It kind of, went 20 or 30 bucks here or there, but nothing really extreme. When you're trying to trade or day trade or swing plays, the main thing you're really looking for here, guys, is rapid movement. So what I saw here was that very quickly, back in around October, November, this thing that was only kind of going up and down very slowly ramped up incredibly quickly from about $215 all the way up to $320. And in fact, in this short time frame, it even went even higher to almost $340. So for a large cap stock, making an almost 100% move that quickly is pretty significant. And when any stock moves any direction quickly, they generally go the opposite direction in the short term fairly quickly as well, because stocks need to consolidate. They don't just go straight up and they don't just go straight down. So what I was looking at here was on this day where I made the trade, I felt like it was extended. It was breaking this support on the monthly basis. And honestly, I felt like it needed to come down a bit because it had been up so much. It hadn't actually had any big breakdowns. Right here, back in November, that is what I thought should have been a big breakdown, but it didn't. It went even higher. So I felt like a pull was needed. There was also some legal actions and some bad news surrounding NVIDIA at the time. So this also kind of helped with my thesis on if it was going to continue to go down or not. Now, as you can see, it did ended up gapping down, which was great. And that's what actually triggered my play. So I wanted to make sure I got as good of an entry as possible. So that is why I started entering as this thing started ramping up. Let's go into some of these executions. Right here, if you look back on my trader view chart, you can see this is where I was entering at, which was right around here. Now, this is important for a couple reasons. One, there's a lot of volume coming in, which meant that is where a lot of people were either going to be buying or selling at. But also, if you look at the intraday chart, so this is on the 3rd, this is on a 2-minute chart, you'll notice that I started buying on these areas of resistance. And what that means is, as you can see, it came up here, failed, came up here, failed, came up here, failed. It almost failed at the exact same levels every single time, which was around $306. So what that meant to me was that there's either a lot of selling pressure there or that there was a lot of resistance there. So to make sure I had a good entry, I wanted to enter around that area, and my risk was at the previous level of resistance, which was around 311, 312. Now what I started doing here is I slowly started adding into my position. The reason why I did it slowly is because in trading, it's really hard to get every execution 100% correct. So I wanted to at least get a piece here in case it failed. But in case it went higher, I didn't want to be too overextended to where I couldn't add to the position. So that's why, as you'll see on my executions chart, I did 1, 2, 3, 4 entries here because I wanted to try to get as close of an average as I can. Now you'll see these 1, 2, 3, 4 executions, and the reason why I did that is because I wanted to get the best average possible. Now you'll see this one little sell here, and to be honest with you, that was a bit of a panic sell. So what was happening was I was executing through here, and I honestly thought it was going to start, fizzling out right around the 306 level. But unfortunately, if I zoom in, you'll see this big volume candle started coming in right into the close. And my biggest fear is that it was just going to blow past this resistance and shoot all the way up here in after hours. And at the time, even with all those buys, I felt like I was a little overextended and had too much size. So what I did was I just sold a little piece to make me more comfortable in case it did start going higher. And again, guys, that's just something to protect yourselves and something I wanted to make sure I did. This is all based on your own risk tolerance. But as you can see, it did pretty much fail right there at that resistance, which is great. Now, if we go to the next day, you'll see what happened here is pre-market it gapped down, which was fantastic for my options. The thing to consider here, though, which actually kind of got me a little worried, was this ramp up here. Now, because I was swinging this over the weekend, even though this started ramping up here and it was pretty far below my entry, you'll see this is around $300 and my entry was around 307. Because of the time decay on my option, if this had opened up and even ramped up to 304, I probably would have been break even on the option. So that's why these ramps, even though it's lower than my entry price, because the option lost value over time, the option becomes worth a little bit less even after those few days. That's one of the downsides of trading with options compared to stock trading. But on the bright side, you'll notice this thing dumped right out the open, went all the way from 298 all the way down to 280. A $10 move like that is massive for the option chain. So what you'll notice on my executions, what I did here is I sold some right out the open. The reason why is I saw this little ramp up and I thought that would actually show some strength. I didn't want to lose money on the trade, and I also didn't want to sell all of it right away in case it did continue to go down. But let's say it did go up. Right here, I was making money. So I wanted to take some profits right out the gate in case it did rip higher. So as you can see through my execution chart, I sold along the way. 1, 2, 3, 4, 1, 2, 3, 4, 5 sells here, okay? So I just traded as I saw this going down. Now you might be saying, Justin, why don't you just wait for, the big move? And the thing is, with these big cap stocks out the open, they can be incredibly volatile. It's not out of the question to see this thing dump down here to the 280s, 289s, and then have it immediately recover out the open and come right past where it opened up at, and then even go higher. And because of how volatile the options are during these big swings, it's very easy for you to give up a lot of profits. So for me, I don't want to be greedy. I just want to take the profits. And in this trade, I only had about $3,000 invested. And because of that, I was already up about 50% on my trade. And to me, I didn't want to get too greedy going for an extra 20 to 30% when making $1,600 on about a $3,000 investment is not bad. So As you can see, I sold along the way, took my profits, and down here, this is more advanced, but I did try to play some option dip buys where I was just scalping call options, but I don't want to go too into that. You'll see I did that down here as well, which was I saw the support forming and I decided to buy it and then scalp it for a nice little gain. But as you can see, it is important to take profits because look what happened throughout the rest of the day. This thing kept going higher. And if I look at the daily chart, it actually ended up recovering the following day. That's why if you're going to be playing short-term options, you need to make sure you take the profits while you have them. Because if I had gotten greedy and tried to hold for even lower, like let's say down into the 230s, which I think this will come down to eventually, I would have given up all those profits. So really important to not get greedy. The last thing I want to do, guys, is I actually want to open up a chart. This is going to be on Thinkorswim, and I have it set for the following day. So this is on the 6th when I actually sold my position. And I have it set for 9:30. And what I want to do is I just want to play this for you live and kind of discuss what my thought process was at the time. That way you can see in real time how this actually breaks down. It's very easy in hindsight to say, wow, why didn't you just let this thing run? Why didn't you wait for that bottoming action? Why didn't you wait for the $20 to $30 price drop? And the thing is, guys, in real time, it can be a lot scarier. So what I'm going to do is I'm just going to play this for the next 5 to 10 minutes and let you guys watch in real time. And I want you to imagine it's your money on the line here and what you would be doing. So let's go ahead and zoom in and let's press play and let it go. So as you can see right out the open, it starts dumping. This is around where I took my profits because I just wanted to take that quick cash because I realized this could start bouncing. Now as you can see, it's just holding up. And this is why I took some size off. As you can see, it's not going straight down like it looks like it did in the chart, right? If I bring up my executions, that's what we saw. That's what you see in hindsight. But look at it right now. It's not going straight down. It's still bouncing. And that's why, to keep patient, I wanted to take some of that size off so I could actually sit for a bigger picture move. And there we go, getting a little bit more size down. You'll also notice I like to keep a bigger picture chart next to my intraday chart. This helps me keep the big picture in mind. Remember, guys, the big picture is what's more important. So I want to look. I see the support broke here, and it's continuing to go down. Now right here, it looks like it might have a little bounce. You see that huge wick to 298? We see a green candle coming in, right? This is where it could base. It could go higher. As you'll see, I actually took some profits right there. Remember, I was just trying to protect myself. I didn't want this to keep going, but I took some more size off, took some more profits. And as we see, it's going lower now. This is what we want. So as a trader, because I took some profit off, I'm able to sit here. I'm able to let this work a little bit longer, let it go further down, let it work with my thesis. If I had full size, yes, this would be great. I would be up even more. But if it had bounced, if it didn't do this, I would be kicking myself for not taking money off the table. Now we're hitting new lows down to 290. As we can see here, I started selling after a push right here. Look at that green candle. Looks like it might bounce here. And I do believe I took some profits right around here. Just again, protect myself. Sure, this might keep going down, but maybe this is the bottom. Remember, NVDA is a good company. They're not the typical scammy penny stocks I like to trade. So because of that, these things can bounce very, very quickly, especially in this market. And as you can see, it's continuing to rip higher. And I'm going to stop it right here because this is basically where my trade ended. And if I bring back my chart, you'll see it did indeed keep going higher. Now it did fail around the 290s level, and this is what I'm talking about being patient. Is you see it failed at 290 first, and you have this big red candle, and then it tried to reach there again, but you'll notice it didn't quite actually reach the 290 level. That would be a good time to take another entry if you wanted to reshort this, because you could buy in around the 291s, risking the 292s, which is where it failed earlier. And if it breaks 292, great, you cut the trade for a small loss. But as you can see, if you did take that trade, it would have been an amazing little return here. Depending how much size you were looking at, this kind of a move on the weekly options probably would have been about 15, 20, maybe even 30% on the option. So not a bad risk reward trade there. I personally didn't take it. I think I was looking at other things. I did nail the bounce though. As you can see, I bought right where support was, and it did end up bouncing higher. I took a small piece of that move. This was about a 15% move on that small little trade. That's not bad. It's the same thesis as here, just the opposite direction. I should have probably done that. Taking a short here, risking the 292 for this. The same reason why I bought the option down here. I bought it right near support, and if it didn't hold support, I would have sold it for a small loss. These are the type of trades you can size in and make a lot of money on because you're not risking that much. You have key levels you're setting the trade around, and then you just let it play out. All right, guys. Well, that wraps up my trade review on NVIDIA. I hope you learned something. If you have any questions, make sure you leave a question down below. I will get to them as soon as I can. And if you want access to my private Discord, where I give you my watch list and live trading every single day in the form of live video chat, as well as alerts, please follow the link below. All right, guys, have a good one. Peace.